Hello traders, Gary Wagner here. Just about 11:45 in Honolulu, 5:45 in New York. It is Wednesday, Fed Day, June 19th, 2019, and this is the Daily Report for Gold and Silver. The current FOMC meeting concluded today, and as expected, there was no announcement of a rate cut to be initiated this month. The probability of that was low, and in fact, the CME FedWatch tool puts a rate cut in July at about 80%. Nonetheless, there were certain nuances in terms of the words that Chairman Powell used that really sparked a couple of markets, specifically gold. Gold closing up about $13 on the day. And the key was a use of the word uncertainty instead of the word patience. And every word that is uttered by Chairman Powell give us a very, very slight flavor for the underlying implication of the changes that he is referring to. But first, let's take a look at the price board. Traders, no doubt an interesting day. Precious metals as a whole moved higher. Dollar moved lower. Of course, we are long gold right now. We'll talk about that trade in detail when we look at our technical studies. But $1,364.30 per ounce of gold right now. Net change of about $13.60. Platinum did quite well also. $811.30. Palladium, $22 rise at $1,495.70. And then finally silver, back above 15 at 15.15. And lastly, all of that provided with some nice tailwinds from a lower dollar, losing about 0.4%, 96.72. Let's take a look at a couple of charts. So traders, I do want to start by taking a look at what we typically call the price board, because I believe that effective trading is one part art, one part science, and also one part luck. And in terms of the luck part, I think we got that today. Now, the low isn't showing it, but the low came in today at 13.44 and change. We moved our stops up yesterday to 13.41.13, so we missed it by about $3. Currently, we are at 13.63.10, putting it up $14.30 on the day. So traders, as you know, we did pull profits on a trade about $45 per ounce, and then a couple of days later, we entered a long position at 13.39.10, I believe. We initially put our stop at 13.33. We kept it as a tight stop because my sense was we were running to new highs, and if it was going to come down, I didn't want the risk factor to be all that great. Yesterday, because of the fact that we were looking at the conclusion of the FOMC meeting, I felt if there's any kind of extreme volatility or something that we just didn't account for, I also wanted to protect ourselves. So we moved our stop to 13.41.13. Now, the low today, 13.44. As I said, current is 63.70, but the interesting thing is the high of the day, because that came in at 64.70. Now, where do we think the market could go, and should we move our stops? First of all, in terms of where I think the market could go, I've done just a very, very simple extension starting from 11.65, this low here, all the way up to 13.51, the former high. And then I'm beginning at these series of, I'll call it a triple top. We definitely have a double top. And there's two important numbers that we're going to come out with. First of all, is the most realistic of these numbers, and that would be the 0.618% Fibonacci retracement. That number comes in at 13.8180. So I feel that that is a very logical and achievable number for us to see this rally go to and conclude at. Above that is $1,452. That's a one-to-one relationship. Now, it is possible, even if we looked at this long move as a wave 3, Elliott Wave defines a Wave 3 as not being able to be the shortest, but it certainly can be equal to a Wave 5 or a Wave 1. Now, my sense is that we want to shoot for the lower of the two targets. And so what we're going to look to do is, if the market continues to move up, we certainly want to trail our stop up over the next 24 hours to 48 hours. We want to see how the market reacts. And if it goes to around 1380, 81, that would be a point we would possibly look to pull profits. If we think this is going to be an extended rally, a rally that's going to continue for months, that might be a point. If we got a close, and that's what's important, a close above that price point, meaning closing at 1382 or higher, that would be a good point to maybe even add a position. However, let's cross those bridges when we get to them. For now, my recommendation is to maintain your current long position, maintain your stop. We will look to move our stop higher in the next 48 hours, and I will send out a special trade alert to that effect to notify you of the price point to move it to and the timing. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.